We're going live. You should have a notification. It is 10:30 a.m. on the West Coast, 1:30 p.m. on the East Coast. That means it's time for Value After Hours. The name makes no sense. I grant you that. Joined by my regular co-host, Jake Taylor, and special guest, Corey Hofstein. How are you, Corey?
I'm brilliant at the moment. Thank you, Toby. I'm excited to be here. I really don't know anything about value investing, so I'm glad the show's name is a lie.
Neither do we.
Well, yeah, you're in good company then. So
we're
excited to be here. Where am I?
Yeah, let everybody know.
Currently living in Grand Cayman. I was living in LA. Yeah, living in LA. COVID hit. Said peace out. Wife and I moved to Grand Cayman.
You and everybody else.
Everyone thinks it's a tax dodge. There's no tax benefits being an American here. I just want to make that very clear. If anything,
you don't have state tax, right?
It's worse. Well, because I was living in California. I don't know if California will let me get away with that.
California, you got the fish hooks in. I got the fish hooks in from California.
Yeah, I mean, I haven't spent a single day there. I'm pretty sure I'm paying full state taxes.
Well, the good news is you can. All these losses the joke's on them.
That's right. Exactly.
So you get Scotland, Chapel Hill, Townsville. What time is it in Townsville? San Francisco, London, Hartwell. Got to find out so I can give the Australian Eastern Seaboard a shout out.
You got a real global audience here.
Yeah.
One fun. On every continent.
Antarctica. Letting the team down.
That would be good if we got Antarctica. I would celebrate that.
Fellas, there is some weird stuff going on in the markets. I feel like almost every time I come on, I say there's some weird stuff going on. I think it would be weird if there wasn't weird stuff going on, but I feel like this is a particularly weird time. If you're not confused, you don't know what's going on. If you know what's going on, you
don't know what's going on.
So good opportunity for us to chat to Corey, who's one of the smartest blokes across all of this stuff.
Just really good at faking it, Toby. That's all.
That's all we need. That's all we're looking for. Handsome dudes who sound good. That's all we're looking for. Well, so what is going on, Corey? Can you let us know?
Yeah, I wish I knew. I actually wrote a note. It's funny. This was perfectly timed because I wrote a note to a bunch of my clients this morning. And I basically said, in my opinion, not that my career has been that long, but like the last 15 plus years, I have never been more confused about the macro picture than I am today. Right. So here's a little list of things we got going on. You sort of still have COVID. You still have latent stimulus impact. You still have supply chain issues, still have demand shock. You have inflation risk, quantitative tightening concerns, a war, economic sanctions.
I love how that comes in like 10 on the list.
Yeah.
Yeah. Wait, I'm doing it sort of chronologically. The financial system has become a weapon. You now have self-imposed supply shocks, Russia versus non-Russia commodity basis risk, China political risk, euro dollar versus euro renminbi risk in the system. And that's just like sort of what I could come up with off the top of my head.
That's like Tuesday.
Right. Exactly.
You left out like Canadian oppression of rights and
no, we've forgotten about that.
Civil unrest we moved on from that.
It's wild. And so my big point, there's 2 points I was trying to make in this piece I wrote, but one of the big points was like, when there's a lot more clarity in the market, I think markets can price things in a lot more linear fashion, right? Like when the market, all they cared about was, will the Fed hike or not hike? Basically rates move as sort of a probabilistic, simpler times, right? As like a probabilistic measure. Like if we think the Fed's going to hike 25 bips and rates move 20 bips, like that is a sign of a high probability the Fed is going to hike. But when you have like a more complex dynamic system and the second and third order sort of events become lower probability, it means that like every single event, even though the outcome of that event has the same sort of impact as it would have before, it becomes a lower probability. And so when that event potentially happens, the price movements become more violent. And so we're just sort of in this environment of like, until all this macro narrative shakes out, I just think you get very violent moves in unpredictable directions.
Look, on top of that too, I think that the market has been expensive for a long time and kind of looking for a reason. That's why I kind of think we get the 2018, 2019, 2020, all those big dips are as a result of things are expensive and the market's looking for reasons to sell off. It feels a little bit artificial, right? With rates pinned as low as they are.
I don't know who said it, but there was one comment I was reading on Twitter the other day that basically said, we should have entered into a recession in 2020, right? We got bailed out. This is sort of the reckoning of like, all we did was push the recession out further and have made the picture much more complicated. I just think we've been so trained over the last 15 years for these violent sell-offs and snapback rallies. It's a little cliche at this point, but I think the path to most pain is just that grind downward, right?
That's a classic bear market, right? Where it just, you get 14, 15, 16, 17 rallies that get sold to lower lows.
I feel like I'm about to pull a Jake Taylor and drop some knowledge. Maybe I don't have anything like written, but so the whole like the letter I wrote was this idea of it was tied into Norse mythology of Ragnarok versus Fimbulwinter, and I think probably people have heard of Ragnarok. It's the big end of the world. It's the gods versus I think it's like the giants that they fight, and anyway, the whole world ends up blowing up in Ragnarok and starting anew. People tend to be less aware, though, of this thing called Fimbulwinter, which is sort of this never-ending winter that takes place before Ragnarok. So it goes on for 3 seasons. They're like long, horribly cold years. They're longer than normal. There's no summer reprieve. It's no end in sight. Sunless days, bitterly cold. And I was sort of saying the last couple of years, we've been like really accustomed to Ragnarok type sell-offs, right? Very violent, very quick. And it sort of rips the Band-Aid off. And I'm getting the sense that everyone just wants that to happen right now. They just want it to be over with, right? And the path of pain is the Fimbulwinter, which is like it's 2000 to 2003 of we just have to deal with bouncy, downward drifting markets.
Even 2007 to 2009 was like that. It started in June, but like by June 2007, by June 2008, nothing had happened. It was just flat.
Yeah, sideways.
And the real action was Q4 2008, Q1 2009. That was when you got the big waterfall sell-offs.
I think the big difference for me, the way I'm looking at it, is like a lot of the stuff over the last 15 years after 2008 to me was very technically driven. You look at each of the individual market sell-offs, and maybe there was like a fundamental or economic catalyst, macroeconomic catalyst, narrative at least. But it seemed to me like you look at March 2020, a lot of that was endogenous market risk, right? You had vol sellers blowing up. You had all sorts of market dislocations. You had some vol issues in December 2018. Today, when I sort of look at market positioning, like everyone's already degrossed. Everyone's bought their put protection. There's going to be some commodity people that blow up with these commodity moves. I don't know whether that will have the spillover effects into the equity markets that ultimately take us down, but like economic based sell-offs sort of almost by definition have to take longer because you have to wait for the economic risks to play out. Like you can't just sort of, unless Russia just decides to like end the war, right? You sort of have to wait for this thing to play out. You have to wait to see how long these sanctions are in place, and how long those sanctions are in place are going to have impacts on commodity prices. And there's just, you can't rush that.
Yeah.
I got a couple of good comments here that I want to read out. One was that there's a shout out to Prince of Wales Island in Alaska. That might be the remotest place we've heard from so far. Shane Warne passed away. That doesn't mean much to most of the Americans on the list, but
how did you feel about that? Were you crushed or what?
Gee, he was young. He was 52, but went out in Thailand and like Koh Samui or something like that. So went out the way he lived. He was a cricketer, bowler, bit of a party animal.
Apparently.
Yen Liao has closed his fund. Have you heard that news?
Yeah.
Do you know any of the reasoning around that? Or heard any of the words?
I've heard rumors, but I think it's just
leave it alone.
Yeah, probably should, but I think just launched with a lot of money to start, and maybe the investor base, at that point was probably maybe wanted different results over a shorter period of time than what was delivered. So it kind of had to be rejiggered.
Tough game.
Yeah, tough game.
Oil was going parabolic over the last few weeks or so, but it seems to have sold off today with a whole lot of stuff has sold off with and the tech and everything has rallied today. What's any ideas on why that's happening? Just that usual volatility mid sell-off?
No idea.
Yeah, I mean,
honestly,
a lot of day-to-day stuff, at least in my opinion, is just like technical flow, right? Like why is junky stuff rallying today relative to quality stuff? Well, hedge funds are typically long quality, short junk, and if they need to degross their book, it means they need to sell their quality stuff and buy their junk. And so if the market's up, that means junk's going to outperform and quality's going to underperform. Like to me, a lot of the day-to-day is just
chair
covering
shuffling.
noise. Yeah, it's just chair shuffling and degrossing and that sort of stuff. It's you got to track it for a couple of days to see if it's meaningful. I mean, and every once in a while, I think there were potentially some squeezes happening in the commodities as they were making really extreme moves. I mean, nickel being a perfect example. I don't know if you guys saw the London Metal Exchange just canceled all trades.
What's that about?
Yeah, how does that work? I find that to be.
I wasn't aware you could do that.
Yeah. That happened in 2000, I think 11 too, didn't it? With they just canceled some orders that had come across that were, were way off, and they're like, well, that just didn't happen.
If two consenting adults get together,
maybe two computers get
and
together
agree on a nickel price,
and they come together and agree on a nickel price. I don't know who the exchange is to say that those trades are busted.
Right.
Is it one side asking for it to be busted? The losing side. Oh, yeah, that one didn't go well.
Yeah, I did like that.
I did hear there was, and this is just supposedly news, maybe a rumor. It's always tough to tell with this sort of stuff when it's fresh. But I did hear there was a fund, I think out of Hong Kong, that blew up on the nickel trade, and so it was like a massive short squeeze for them trying to cover getting their margin calls. And I don't know whether the trades getting canceled will save them.
Sorry, no tag backs.
Yeah. Yeah, I don't know. It does seem like it sort of brings into question the, I don't know, how do you ever trade that exchange again, knowing that it could just be taken away from you at any time? How does that make a market?
Yeah. Agreed.
We've been fiddling around the edges of some things that I don't think we should fiddle around the edges of. It's been for the last couple of decades we've been doing that. Some things that, if we're all going to pretend to play according to some rules, then we got to enforce those rules all the time because there's lots of unfair outcomes. I got a good question here. Is there a bigger? Sorry.
No, I was just saying you don't want to. The whole system operates because of trust, and if you take trust down, it gets way more expensive to do every single thing as a society, and that's on net very bad for us. So you don't want to pull at the Jenga pieces of the trust tower, I don't think.
Yeah, that was what I was trying to say less eloquently. I've got a good question here. I'm just trying to scroll down to it. Sorry. Is there a bigger dispersion amongst winners and losers in a very inflationary environment? Like, is Nike really supposed to be treated with the same as all birds in ability to deal with inflation? I think that's a good question.
It is a good question. I mean, you get at pricing power, you get at brand, and which is another way of saying sort of stored up pricing power that you've built over time by taking less profit than what you delivered in value to your customer. You get
supply chain leverage.
Yeah, that's what I was thinking.
Yeah,
I don't know how Allbirds arranges its supply chains, but I imagine that they're probably
can't be as good as Nike, right?
Well, they've got to be a little bit more asset light, right? There's other companies doing other stuff for them that they wouldn't have brought in house, and Nike's probably doing all that stuff themselves. Makes it a little bit easier for them.
But let me complicate the question, right? Because I think a lot of people would say over the last decade we've had monetary inflation, which has been a tailwind to the growth story, versus now suddenly you have both real assets demand and supply driven inflation, which is a very different type of inflation, which could hurt a lot of those growth stories, right? So it's sort of like this interesting, which type of inflation are we talking about here?
It's just so monetary inflation is if we print a whole lot of money that shows up in higher cost of goods and services over time. The other type, fiscal or whatever. I'm sorry, I missed what word you used then. But
well, I was just sort of saying like commodity supply and demand.
Why is that all of a sudden different? Because we're cutting off supply. Well, we've got shipping issues and we've got a war going on in.
Yeah.
Well, I think it probably has to do with like, so at least in theory, right, you would expect them to be connected, but the monetary inflation seemed to never emerge. It just sort of like all that money that got printed through quantitative easing, if you want to call it money printing, just seemed to sit on corporate balance sheets, right? So it never sort of seemed to escape into consumer demand. To
velocity
drive up prices.
Dropped off a cliff,
right? So, but it ultimately helped speculative growth companies, at least in theory, because money was cheap. You could raise a lot of money. Debt was really cheap versus like today, like commodity prices, inputs of goods have definitively gone up, right? And whether that was ultimately a function of all that quantitative easing or monetary policy over the last 15 years, or whether that's, from COVID demand shocks, Russia-driven supply shocks, is a different question. But like one is much more, to me, immediate. Like there is no doubt the cost of goods has gone up today.
Yeah, and you can't print more oil or print a supply chain.
Right.
Whereas maybe you could theoretically solve some of the kind of more monetary inflation if you were able to
stop printing.
We haven't even done that yet, though. That's kind of the scary thing, is it's like the balance sheet has still been expanding. It's just slowed down.
What do you call that? It's like verbal austerity or something
insanity,
like that. Remember austerity? That was a word that we used to use.
Here's a question.
So no austerity.
What do you guys think the Fed does? Do they change do they become more dovish on hikes and more hawkish on the balance sheet? Like what do you think the path forward here is now that things have got more complicated?
I think their default setting is to print as much as they possibly can. And the only reason that they were talking about doing anything was because inflation has been ripping. But now they've got an excuse for inflation that's got nothing to do with what the money that they're printing. So now they're just back onto the printer's going to run. I think that there might be some like little, 25 basis point raise is meaningless. And they'll do a few of them probably just because it looks good. And then in a few quarters, we'll panic and we'll reverse it all.
Put it back to zero.
Put it back to zero.
Yeah. So the reason I ask is like, certainly oil up in the short term is immediately inflationary, right? By any measure. But long term, it seems to be deflationary because it creates negative economic growth shocks, right? Demand disappears. It sort of self-corrects, which is bad for earnings, right? And so the Fed, I don't think, wants to be hiking into that economic decline, right?
They should have been hiking over the last few years, but they haven't. So now we're at the point of the cycle where you're right. Now we should be lowering because oil's going to do it. Oil's going to do what the hiking was going to do anyway. Oil's going to spike the bubble. Oil already has, I think.
Could be. Yeah, that was
real bullish conversation today, boys.
Yeah, well, I think to be fair, I'm always pretty bearish.
This isn't new.
Yeah, like don't come here for the sunshine.
All right, so maybe by the way, I've just taken over as host.
Yeah. No, please go
with it.
So I'm trying to read
some
what is the most bullish thing you can think of right now?
Well, I like the fact that there are some names that I think there are some businesses that are too good for the price that they're trading at the moment. And I would prefer that the market get a little bit more beaten up so you can, swing through and hoover up some of those better names. Whenever there's like weakness in the market like this, I think it's a great opportunity to upgrade the portfolio, buy some better quality at lower prices.
my most bullish thing is looking longer term and saying that humans and ingenuity and technology is going to help us have a better tomorrow. And that if anything, we probably needed a little bit of some hard times to increase our character and be a better version of ourselves.
Hard
when we
times
get
make
there.
strong men.
Yeah, true. So it can't be easy and also get to that point where you need to be. So I think long term, I'm incredibly bullish on humanity, even the US. Even some people seem to be a little bit like, if you listen to Dalio at all, like it sounds like the US empire is over, but I think I'm hopeful that we find ourselves again and kind of go back to our roots a little bit as to what was important that got us here, like trust, capitalism, democracy, free press, all those important things.
I was watching Station 11. It's like post-apocalyptic. A virus, like a flu-like virus, kills most people, and then there are various little pockets of people around. And the episode that I got to last night, the kid is on he downloads Wikipedia onto this little handheld computer, and he's looking at the definition of capitalism, and he's like, can we just delete it and pretend like it didn't happen? Like, deluded.
Yikes.
All right, Toby, I want to go back to your point though about upgrading the portfolio. So, because you're talking about these pockets of like, and it's really interesting. I don't know if you follow New River Invest on Twitter, but he posted something, I think it was yesterday or 2 days ago, where he was highlighting the different valuation ratios in sort of like the Morningstar style boxes. And interestingly, from like a historical percentile basis, small cap growth was actually like one of the, on a historical basis, one of the cheapest areas right now versus like large value.
Over what period?
Looking back, going to, I think it was like early 2000s. So if you compared current sort of earnings, I think it was
PEs usually
on a percentile versus historical going back to early 2000. I think it was in the one of the lowest versus like a large value, I think was up at like the 90th percentile. Like it's been bid up pretty significantly. And I'm starting to see that in sell side notes too. Like it was saying people buying into commodity producers and all that sort of stuff. Like the net positions are multiples higher than where they've been historically.
What do they do in that small cap value with all the money losers though, to come up with an E for that?
Small cap growth.
But
yes,
small cap growth, but
where
like
there's
even
probably
more
even
so,
more
right?
earning losers. Yeah. I don't know. That's a good question.
So you drop half of them that are, have no earnings, and all of a sudden it's like, oh, this looks cheap.
Yeah.
Yeah, I hadn't noticed that, honestly. I don't know. Because I still am trying to put it together bottom up, even though the process that I have. So I'm always surprised at some of the names that come in to hitting range for me, because I tend to be more conservative. But yeah, there's some, I distinctly remember from 2003 until 2007 buying a whole lot of really cringy tech that, like, this is what I've said this a few times, but this is kind of like, this is what I think happens. Like, tech becomes violently uncool. Like, it's in some ways the financial markets are like, fashion. Like, if you have the wrong colored jeans on, like you buy a pair of jeans, 3 or 4 years later, you walk outside, it's like they're fluorescent yellow or something. Like the color of the dye has just changed so much that they just look terrible. And the cut looks terrible relative. And I think that happens to stocks as well. Like these tech stocks that everybody fell in love with, like the other side of that love is this hatred for them. They just become incredibly cringy. And I think that's a good opportunity to go and pick that sort of stuff up. So I didn't,
but there's no way we're there yet. You look at like flows into ARK.
Yeah, still positive.
They had 850 million come in over the last month.
People have been conditioned to buy the dip.
Right? Yeah.
It's
everything
wild.
rockets back up the second it's like the golf ball off the cart path, right?
But it hasn't. It hasn't bounced. I don't know where ARK is today, but it was still off pretty significantly this year after being off pretty significantly last year. particularly from the peak last year.
Well, it's down to pre-COVID highs. It's on a
Yeah,
full round trip.
That's kind of interesting, isn't it? A lot of
trips.
stocks have done that. Yeah. A lot of those techie stocks have done that. It's like the 2 years didn't exist. And I got to say, I don't mind. Like, we can scrub those 2 years off the record books. I don't care.
Warren B once again getting the last laugh.
Who could have ever expected it? I thought the world had passed him by for sure this time.
It turns out he's the world's greatest tech investor too. I do love that.
Yeah, that's actually dominating every style that there has been. Like, he's like style bender for UTC.
Yeah.
That's sort of where my question was going, though, Toby. Like, I remember back in, was it 2016? And you talked about this on my podcast, where Apple just became a value stock. Like, I was starting to question whether some of these small cap growth names were going to start appearing in deep value portfolios.
Yeah, I think they will. I certainly, I can't. I've got a rebalance coming up, so I can't say too much. But yes, I'm like,
licking
you don't want
chops.
me to front run you? You don't want to tell me the names up front?
Yeah. I've got one that I'll talk about it after the rebal, but it'll make people giggle. I mean, if to the extent that anybody's heard of this thing, but I remember this name from a little. This is like over the last decade. This name was about 5 years ago. This name was very, very hot. But I hadn't seen it for a long time, and when it popped up in my screen, I had a little giggle when it came through, particularly where it's trading on a PE of about 6 or 7 at the moment. It's pretty funny.
Are you buying Crocs again?
Damn, dude.
Crocs are in, man.
Crocs is in the screen too. Crocs is close. I don't know if I can bring myself to do that, but I did see a few people calling on like before Crooks had its recent run. There were people who were banging the table on Crocs, and I kind of laughed at the time. But who knows? Crocs is it's a cockroach or something. You can't kill it. It just keeps on going.
I remember going out this summer, and all the I went out for ice cream with my wife, and we're like, all the little teenagers on dates were all wearing Crocs, and I was like, what is going on? And then I looked at the stock price, and I was like, well, I guess they're buying.
Yeah, how funny. That's funny. My kids, as I was walking up to school yesterday, my 6-year-old was like, what is Bookface? And my 8-year-old then tried to explain to him what Bookface was, which is Facebook. And I was like, that's so funny. They don't even know what it is. What is Bookface?
Wouldn't you like to live in that world where you didn't even know where that was?
Yeah, I did think that was pretty funny. JT, you want to do some veggies?
Yeah, hopefully this maybe ties in our conversation a little bit more. And so this is a little shout out from somebody sent me this video on this guy PK13 on Twitter. And I don't know whether to be offended or that this is an amazing thing that someone sent me a video to watch about like a nuclear explosion and what that would be like if you were in it. But this video is put together by, I don't know how to say this. It's some German word like Kurzgesellschaft or something like that. I don't know. I totally was probably way off, but they make all these little like animation videos. They do a lot of them about nature. They're really cool. Like they're super interesting. They're well narrated. But they happen to team up with the Red Cross to do one about what it would be like if a nuclear bomb went off in a major city. Now, it's a little bit jarring. And I apologize. I talked to Toby about this before I decided whether I was going to do this segment or not, because I was like, is this like too much, too negative, too dark? But it is I think there are some things we can pull from this over and above just the awesome. And I use that in the more like, I am full of awe at what the power of this is, not awesome. Like that's cool. So hopefully no one gets offended by this. And if they do, I'm very sorry. And I pray that we don't actually have to see this in our lifetimes. But it does feel a little bit like this might be, I don't know if you guys remember when you were a kid, but like, I remember having nuclear bomb drills. Like you had to like get under the desk and maybe I'm dating myself a little bit there, but
you didn't do that in Australia. No.
Yeah. Well, you guys are too far away. No one gives a shit about what's happening there. Yeah. You're too young and you're too from another planet. So in the US, we had nuclear bomb drills when I was little, but they went away by the time I was probably like 6 or 7. And then I don't know, I guess when the Soviet Union collapsed, we didn't worry about it anymore. But it kind of
feels
like
hiding under your desk was going to save you.
I know, it's like ridiculous, right? So this is, as you know, like it's just such immense levels of energy that are released in one of these things. I mean, it's ungodly. But what happens is like there's this intense wave of light, heat, pressure, and radiation that just like is instantly explodes out. And in phase one, which is like less than 1 second worth, the like in a millisecond, basically, like there's this ball of plasma that's hotter than the sun that instantly just like pops out like 2 kilometers across. So, I mean, you can imagine if you are, or anything that is in that 2 kilometers, it's basically vaporized. It's like putting water onto a hot skillet, you know, how it just like sizzles and then it's gone. Like that's what happens. And all that soil and water and construction material, cars, people get just vaporized into like less than dust instantly and then carried upwards. And that's like what the mushroom cloud is, right?
Except for the people hiding under their desks. They're all completely
then you're
safe,
right?
Like the people in the crash position in planes, when the plane crashes, they just bounce free of the wreckage.
Wait, Jay, can you say that? Sorry. The plasma bubble, the 2 kilometer plasma bubble, the mushroom cloud is actually from the vaporization of all this stuff caught up in the plasma bubble.
Right. And so all
That's
that
horrifying.
Stuff mixes with the radioactive material, and that mushroom cloud that comes up then is what eventually, like, that's what fallout is all of that stuff when it's up in the atmosphere starts sticking back together and becoming dust particles, and then it will eventually rain this like toxic death from above. But that happens a little bit later. We'll get to that. But before that, in that first millisecond, if you happen to be looking in the direction of this, you will be blinded for at least a few hours. Like you will not be able to see anything. It's that bright of a flash. And there's a thermal pulse that then will go out 13 kilometers. So that ends up being like 500 square kilometers if you do the math on that. But so like a radius of 13 kilometers that basically, like, if anything is combustible, it will be ignited. It's basically like a firestorm. So like your clothes, your hair, your skin, your car paint, like wood, anything that is combustible will just basically like catch on fire within 13 kilometers from here because it's just so hot. And then phase 2 is the next couple of seconds after that millisecond that just happened. That heat then also creates this compression of air that is expanding and pushes out. And it's basically like a hurricane, faster than hurricane winds that blow through and just like shove everything away. Most buildings are just ground down to like the base from this windstorm. Naturally the shock wave will like lessen as it expands, but by the time it gets out there, like you have, I think it's 175 square kilometers will basically just be like instantly collapsed as if a hurricane had happened. Now, and that mushroom cloud then also, because it pulls up, it actually pulls in fresh air from all around the surrounding area. And so it'll be tons of oxygen actually mixing in. And so like, it'd be like putting, a hair dryer onto the fire. Like everything will just like, even like the fires will be even worse because of this oxygen that's being pulled in from the mushroom cloud moving up. So then phase 3 is like the hours and days after this happens. And, it's basically like a nuclear explosion is effectively like every natural disaster that we know happening simultaneously. It's an earthquake, it's a fire, it's a tornado, and then of course the radiation part of it, like as if you had a nuclear plant that melted down. So after this, there's a black radiation rain will fall down from this cloud after it coalesces. And basically every breath that you take within that area is going to be poison for you. You're internalizing radiation. Anything you get on your skin is problem.
I'm laughing a little bit because the comments are pretty funny. Phase 3 is when the Fed cut rates.
Well, so that's the next thing, is that like no government wants to tell you this, but there is no infrastructure to mitigate this kind of disaster. Like every hospital in your area is going to be leveled, or every neighboring hospital from any city is going to be overrun. Like we just do not have the capabilities for this. Like you are on your own basically, which is scary, right? And then as time plays on, more and more people, more and more the survivors will succumb to cancers like leukemia because of the radiation that they absorbed. And so there's no nation on earth that has any real mitigation plan for this. So all of this stuff is like scary, and the video is meant to be scary because it wants to push the agenda of like we need to all as a species band together and say like we have to disarm all these and kind of make an agreement for everyone that like it's such a horrific outcome that we shouldn't have these. And I think that's a pretty noble vision, actually. Like I would like to see us walk that back. I'm very skeptical that'll happen, but all right. So all of that said, I thought maybe it'd be interesting to kind of connect it back to our previous conversations. And one of the things that's happened in Russia is that like something that you may have owned just got vaporized. It was almost like that was that millisecond that in the very beginning of it that like just exploded, like that just disappeared. Like it doesn't exist anymore. Right. I read somewhere that I think the Kentucky pension system was like owned a decent chunk of, I don't know how you say it. It's Spurbank.
Yeah, it wasn't true.
It wasn't true. Okay. Well,
no, that was a rumor, and they actually did a whole press release being like, no, we don't.
Corey, don't ruin my story.
Sorry.
with
sorry to bring facts into it.
Your facts. I'm sure someone was holding the bag there at somehow, right? So
yeah, there was a fund called H2O that basically blew themselves up for like the 14th time because they were way overweight Russia.
Okay. So we have this initial like phase one, which I think we've just maybe kind of lived through a little bit, but now there's phase two of like sanctions and all this other stuff that's interconnected. And like, I'm not sure we really know where all the radiation is going to be happening, where the interconnected, second and third order effects are, who's going to get leukemia from this. Like, I think this could it's obviously plays out on a much longer timeline than a nuclear explosion, but that issue of like, it's vaporized and now, we have to pick up the pieces and like, what are the next losses that happen because of that? Like, I don't think we're done with this is what I'm saying. And that we probably need to be mindful that we're in the middle of something.
Have we seen any blowups?
Kind of less than you would expect, huh? Like yeah. Where's the long-term capital management right now getting blown up because of like a ruble, issue like last time?
Yeah. You heard anything like that, Corey?
No, I mean, I've heard commodity space is where it would be right now. I mean, like equity markets, no one had a tremendous amount of exposure to Russia, as far as I know. And they've been so isolated over the last 20 years that I don't think anyone would dare have the type of ruble exposure that you saw in like the 90s. So I just think it's a different regime situation. I did hear rumors of, again, like certain firms having too much Russia equity exposure or certain firms having commodity issues right now, but I haven't heard on like really serious knock-on events yet.
Yeah. What was that indicator we were looking at this morning, JT, it hasn't really spiked that much? That was the
high yield spread.
The high yield spread, yeah, that hasn't moved.
You have seen CDS of like a bunch of European banks start to really pick up.
Yeah, that's interesting, isn't it? Because like they probably had a little more Russia exposure. They're probably in that, they might be in that like second, 13-kilometer radius.
Yeah. And by the way, Russia just declared that they were banning the export of all products and raw materials until December 31st.
December 31st?
Yep. So it went from the supply side deciding we were going to do an economic sanction to now, actually the demand side deciding an economic sanction to the supply side has basically said, they've given us the middle finger and said, even if you want it, we're not giving it to you. Now, it seems to me like that's sort of like cutting off your nose to spite your face when you need those exports economically, but we'll see how it plays out. Maybe a negotiation technique.
Yeah.
But I agree with you, Jake, in terms of like right. So I'll tie this back to what I said earlier. Like the initial drop is the Ragnarok, right? That's the chaos. But like the fallout here is this prolonged, we need to wait to see how these economic risks play out. Like there's this future event risk, and we don't know when it's going to happen, and we don't know what it's going to be. We just know there's this like amorphous event risk out there, and it's sort of realizing slowly and in lumps over time, and the market needs to digest what the implications are. And so I think that's why you're seeing the markets down, 12, 13%, or at least the S&P is year to date. It's not down 40 or 50, right? Because there's nothing that says it should be yet, but you could see that grind lower. And you're getting days like today that the market was down 80 bips. I think when we started the show, the market was up 150, and then I just checked and it's flat again. Right?
Is it really?
No one knows what they're doing.
So it's all over the place. I mean, and I think you're spot on. And it's really hard to digest all this complicated second and third order stuff because it's not clear, right, what the
who's in the blast radius.
Yeah, and I think it's also not clear like what the second order effects are, or when you're dealing with someone like Putin, like when he's just going to decide to say, you know what, we're not even going to give you the supply. We're cutting you off. You don't want it? Fine, we're cutting you off.
Yeah.
Breaking up with you first.
Yeah. Exactly.
Preemptive breakup.
It's a funny. Go ahead,
sorry,
Toby.
I was just going to say, the world sort of has gone in this funny direction over the last few years, where now you can't have China as your sole source of supply, at least for sort of manufactured goods, and now you can't have Russia as your supplier for whatever it is, wheat and oil. What does that do to the shape of the world? Do we have this world that just breaks into two, where there's China, Russia, I don't know, Iran's, whoever else is on that side, Western world on the other side? Does it go back to sort of like a quasi Cold War?
Yeah, does it strengthen the dollar or weaken the dollar as the reserve currency, right? Does this help China or ultimately hurt China?
Are there two? I mean, they've got to be considering another reserve currency, haven't they? They've got to be considering. China and Russia won't put up with that, will they? They'll have to create their own.
Well, that's if Russia comes out of this. I mean, I think they risk very real hyperinflation economic collapse scenario if this drags on longer. I mean, to me,
who US or Russia?
Russia for sure.
Okay.
I think. Look, I am by no means a macro expert. I am by no means a war expert. It seems to me like Russia has not committed the forces to Ukraine that they could have. That would have just been a clean sweep. I think if Russia wants to take Ukraine, it's at least, the way the US took Afghanistan. I don't know if they can hold Ukraine in the long term, but I think they could have taken Ukraine pretty easily. It seems weird to me that they just sort of like are slowly meandering their way in. Maybe it was to try to like reduce the blowback, but to me, the economic sanctions killed them from an economic perspective. I mean, you've seen what's happened with the ruble, and they're having bank runs.
They must have worked through all these issues before they kicked the whole thing off, mustn't they? They must have thought this is the likely response. I mean, Russia, is it literally just Putin deciding?
Right? Who's saying no to Putin?
I don't know how it works.
Yeah.
I would have thought you think through a few scenarios, right? You just go on the back of a napkin, you just figure out what's going to happen.
Just like play a game of Risk together. And
but let me ask you guys this, right? Because so Ukraine gets invaded, and all of a sudden, you don't have access to your bank. If you're an investor, you don't have access to markets anymore. You may not even have access to cryptocurrency at that point, right? And it made me think a lot about, like, in a true, catastrophe situation, what is your reserve asset, right? People might say food, clothing, ammo, maybe gold, right? You need like maybe gold coins that you carry around. But part of that, where my thinking went, was if you live in the Ukraine and Russia's on your doorstep and you think that is sort of an existential risk to your safety, how much of your assets do you keep in exposures like that? Because you need to, because you there is this risk that like you might have to flee one day, versus in the US, Like, I have never in my life considered the fact that like my exchange could shut down and all of my net worth that's invested in stocks could become unavailable to me. I haven't once considered that. And I wonder how many American investors ever have, and what a luxury it is for us to be able to continue to invest in productive risk assets, and what that does for our economy versus the potential tax in other economies where they don't have that luxury, right? That they can't commit the same amount of capital because they have to sort of reserve some in some sort of hedge.
Well, this is the part that really frustrates me with our lack of a backbone from our political leaders, is that we jeopardize a lot of those things that we take for granted by taking the really easy decision today and kicking the can down the road for tomorrow and making it someone else's problem. And I will readily admit that that is probably a probable outcome of any democracy with a short-term limit, where it's like, hey, that's going to be the next guy's problem. Like, I'm just going to try to get reelected, and I know my time here. Like, I have to just get my little things done, and then the really tough decisions are for someone else. But you can't just keep doing that over and over again until you get, now you're left with only hard decisions. And to me, it's like, it's very frustrating to have such weak leaders that wouldn't, like, there's no, Paul Volcker's not walking into the Mariner Eckers building anytime soon. Like, that guy's not there anymore. And that's frustrating to me, because I feel like we had something pretty special, and we could still, but we jeopardize it because of a lack of will, really, and leadership.
I think that there are some, my sentiments are to agree with that, but there are plenty of talking heads on television who'll tell you that the Fed's been doing a great job. I mean, I realize you're not necessarily just talking about the Fed there, but it's not, they would say, look, the stock market's essentially at all-time highs.
Why is that considered winning, though? Like, that's
well, there's lots of venture capital being deployed. There's lots of venture capital out there. The US has created a lot of these. Like, there's really every other stock market in the world, essentially, probably other than China, looks, they're basically like Australia or Canada. They're heavily
resources and
heavily basic materials. And then there's a big chunk of banks and financials, and there's really not much else in sort of consumer discretionary. Whereas the US produces like huge amounts of consumer discretionary stocks, which are the things that really seem to be the only difference between the US stock market and the rest of the world. It's why the US stock market's been so successful ever. I mean, it's not necessarily the Fed that's doing it, but there's some condition, some attitudinal, something in the American psyche or something in the institutions that's created that.
Yeah, I mean, I'm sympathetic to the argument that we kind of could overclock the system by having really loose monetary, and maybe you explore the frontier of technology faster in an overclocked system by having cheap money chasing it around. It's an interesting idea.
Maybe it's the singularity.
I know that you have to pay.
Maybe we're approaching the singularity.
Could be. In which case, none of this matters.
Well, I love that. There's that. I think it's Keynes, and I don't know if he actually says it in the general theory. I can't remember where this comes from, but there's a great line from him where he says, and he said it in like 29 in the crash. Basically, you should be fully invested in all of these names, and you shouldn't be selling out, because if I'm wrong and it goes to zero, then it's not going to matter. If it recovers, then I'm
rich bitch. Is that what he said?
Some words to that effect.
Yeah.
I think that's right. Like, and I kind of,
yeah.
I don't think we're very far into the volatility.
Pascal's wager for markets.
Something like that. Yeah.
Yeah.
I don't think we're far into the volatility. I think we could have, if this is a mega bear, which who knows, it could be. That's a possibility. It's not necessarily either. It could easily just bounce from here and we go back to normal. But if it is, then probably don't want to shoot your wad too early. I guess that's the problem, right? You're stuck in this. You should be roughly fully invested now in all of the good names, and then proceed down another 20 or 30%. Just wear it all the way down.
Well, here's a little stat for you guys, because I like to to talk numbers. So this comes from Goldman Sachs. They what you're seeing right now to that point, Toby, like you don't think the volatility is over, is that like talk is cheap right now. So you look at all the indicators that would people measure sentiment, and they're incredibly bearish right now.
Yeah.
Right. And that's normally an indicator that we're near the bottom.
Right.
But what you're not seeing is flow slow down or turn negative.
Talk.
So if you look at risky versus safe asset flow over the last 4 weeks, it's still in the top 100 percentile since 2007.
Wow.
If you look at global equity flow over the last 12 months, it's near the top 100 percentile, and global equity flow over the last 3 months, it's near the top 100 percentile since 2007. You still just have a tremendous amount of money. And to the point I made earlier about like ARK raising $850 million, the flow is still into risky assets. And I think that's because, you know, not to say this is not like a blaming on retail, but like long only investors that are unlevered, they don't get blown up. They just sort of slowly capitulate on a rolling basis, right?
Yeah.
And so they can keep buying in and buying in. I mean, again, ARK has round tripped its net lost investors' money on a dollar weighted basis, but people continue to pile in because they believe in the thesis. And I'm not saying it's right or wrong on what they do, but what you are seeing from a behavioral perspective is the sentiment and what people's actions are could not be further apart. Or perhaps people think, oh, I know the thing to do when sentiment's low, it's to buy, right? And we sort of have now it's the game theory of like, oh no, everyone knows to do that, so it can't be the bottom.
Yeah. Well, I talk about that a little bit with the fear and greed index. Like I always think it's it's a sort of an arbitrary construction of that index. That's why someone was chipping me for saying it's a nonsense index. It is a nonsense index, but in a short-term basis, it has seemed to be reasonably predictive of these short-term bottoms, because when it goes below 20, it seems to be a good time to buy. But I always put the caveat on it that we don't know what it looks like through a 2007, 8, 9 type scenario, because the index starts in 2010 and we haven't had a mega bear since 2010. So we don't really know what happens to that sentiment. I would love to know. I mean, does it go negative? I've got no idea.
Yeah, that's the thing. It's calibrated on, you get down to below 20, but that 20 on a more historical adjusted basis is like 80, right?
Do you think it's something like the Michael Green thesis, Corey, to that flow thing that you're talking about before, where basically there's so much passive flow?
How does indexing fit into all this?
Yeah, I'm not Michael Green, so I can only speculate. Yeah, I don't know. I mean, right? I will tell you again, a lot of like sell side notes that have come out in the last couple of weeks are talking about quarter end rebalancing, right? Where you're probably going to see selling down of bonds and buying of equities and target date strategies and global target risk portfolios that knocks into equities that are held within the index versus not. During those sorts of rebalance periods, you tend to see equities within the index outperform equities outside the index. So there are some like short-term knock-on effects of that stuff. But right, I think again have we seen that recently?
Well, you know, the one of the simplest indicators I think is just the equal weight index versus the market cap float adjusted weight, the index that we all know and love.
So this is more like This is more like S&P 500 versus Russell 1000. Like a lot more target date stuff includes the S&P 500 versus the Russell 1000.
Okay.
So not like equal weight within, but yeah, to your point, like, is it all going to large cap flow? You know, is it helping sustain large cap? I don't know. I mean, I think it's an interesting question of like, as a nation, we have turned the market into a savings vehicle every 2 weeks, with 401k plans. Does that change the dynamics of where things were in the 2000s, right? Consider the fact that in the 2000s, target date funds were a sub $10 billion industry, and now they're close to 3 trillion.
Jesus.
Right.
So how, good marketing.
How does that change dynamics of the world where like you're now literally like forced savings is flow into the market supporting equities?
And with demographic glide path built in.
Right.
Just to go back to I think it's an interesting example of what Michael Green is talking about, that historically equal weight has tended to outperform the market cap float adjusted weight version of these indexes, for the reason that equal weight's sort of a proxy for value, right? They're buying more of the cheaper things and less of the more expensive things just by being equally weighted across all of them. And for a long time over the last, historically, equal weight has outperformed, but for the last few years, the other ones have outperformed equal weight pretty consistently. But I think that might have turned around roughly about the same time that value started working. Do you guys know off the top of your head if that's still the case?
I don't.
Because I know that
I do think that human nature hasn't changed though, and that if there's enough pain quotationally, even in your target date fund, if it's going down and it keeps going down and going down, then people will capitulate, even with the best laid plans of financial advisors of not punching out. Human nature is kind of inviolable.
Do people pay? I don't think people pay as much attention to it. Like most people don't pay as much attention to it as we do. They're not looking as often as we are. They get an update once a year at the end of the year and it tells them how they've done. I mean, that was what, when I was working, that was what I used to get an update for my retirement funds. This is how much money you lost this year. Like, great.
So it brings in, it actually raises to me an interesting question about like delayed wealth effect, right? Do you tend to see like, okay, the wealth effect, if the market goes down 30% and people open their end of year,
like these echoes
knock on into their spending, for the next 6 months?
Yeah, it's a good question. Probably true. I mean, it kind of has to be, right?
I kind of find it amazing that ARK is so relentlessly bought. Honestly,
it's the future, Toby. Come on, this is.
Listen. I as the non-value investor, I will defend ARK not from an investment perspective, but she has built a brilliant business.
I agree with that.
I say this over and over. Investment management is different than asset management. Asset management is a distribution game. She has built a brilliant brand. She's adopted social media. She's a terrific evangelist. I don't care if you agree with her methodology or not. You cannot disagree that she's built a pretty brilliant business.
I agree with that, and I've said that.
Totally.
I've said that lots of times too. I'm hugely impressed by Kathy and the thing that she's built, and in such a short period of time, and for lots of other reasons, because it's tough to do that what she has done. But every other famous stock market peak has had that mutual fund or brand that was sort of the go-go mutual fund of the day. And it was Janus funds in 2000. And it was like literally like the go-go years, like Gerald Sy, and every single time they've been washed away and they sort of were unable to come back. And here she is, she was down 50+% last year, down 40% this year so far, and could recover at any point here. But the flows have been positive. Like, that's kind of to your point, Corey. Like, the business is kind of incredible, and I'm amazed that people are, that may be the right thing to do. That may be exactly the right thing to do, to keep on buying if the thesis is sound. But people don't usually do the right thing, do they?
No, that has been the surprising part. Is people normally, you expect the shiny object performance chasing, though in my experience, what tends to happen is like, a fund hits it really big, it invites more flows, it starts to underperform, and like half the money goes out. Typically, enough people go, they don't want to admit they're wrong, because selling is an admission you're wrong.
Yeah.
But you don't tend to see the doubling down. And that's what's been really impressive here. And I think part of it is like, people are committed to the story. There is a class of investors who truly believe in this disruptive innovation thesis. And whether they think the valuations are right or wrong, they might think they're far more attractive now than they were 2 years ago. And so why wouldn't you pile more money if you are
back to where they were 2 years ago.
A 15-year investor in this thesis?
I hope that that's the case. And I hope that she's right, actually, because I kind of want to live in the world that she's describing. I just also know that it's really hard to predict what the eventual supply of all these things will be, what the competitive dynamics for these companies are, which means like what's the profit pool look like.
Well, I saw here's a stat for you, Jake. I saw someone went through all the analyst reports and added up the target earnings. It wasn't the TAM, it was like the target potential market cap of all these companies that they were investing in, and the sum of all their market caps was larger than like the entire US market cap currently is. And it was like, okay, that's like there is a speed limit here you have to adhere to.
But having said that, I mean, if someone had pointed out, like not even that long ago, right, 10 years ago, 12 years ago, if they had said it'll be, FANG or Fat Man or whatever the acronym that you want to use for that is, that'll be like the big chunk of the index. Like that would have been quite hard to believe too, I think, at the time.
Yeah, but there's a difference between big chunk of the index and larger than the entire US market cap.
But I mean, it's like we're talking like 25% of the like it's. I get that it's not quite on the same level, but it's stranger things have happened. I don't know.
I'll take the under.
Maybe
on that
not.
one.
Maybe nothing that strange has ever happened. That might be a big call. That's time, fellas.
It could happen, but it's not the way to bet.
You're saying there's a chance.
Yeah.
That was fun. Thanks, Corey. Thank you,
guys. Job. I appreciate the time.